Welcome back, and thanks so much for being with Morning Live. Now, South Africans are increasingly turning to credit to make ends meet, and that's according to financial services firm DebtBusters. The executive head of the group, Benay Sager, says that the company's latest Q1 2023 debt index found that consumers are supplementing their monthly income with unsecured credit and personal loans, using them as a lifeline. Now, on the other hand, South Africans are also seeking help to manage their growing debt burden, with demand for debt counselling growing by 40% compared to the same period in 2022. Benay Sager now joins us virtually to share more about South Africans seeking help to manage their growing debt burden. Benay, thanks so much for your time. Welcome to Morning Live.
Thank you for having me on the show. It's always a pleasure to be here.
You know, I wish I could say that I'm surprised by this, but I'm not, because I think at this point we are all feeling the pinch, Benay. But just looking at the data at your disposal, why are we seeing these large numbers of people turning to credit at a time like this when, of course, we don't even know that we'll be able to service that debt?
Yeah, I think South Africa's, working class has been under huge pressure for the last several years. And I think we need to go back a few years, up until 2015 or so. There was growth in the economy, steady growth, and so on. And since then, it's been very, very slow. In fact, it's been very muted. And I think what you're also seeing is impact of three things on the consumer. The first is that we've seen over the years, the incomes have not really gone up for many South Africans. In nominal terms, yes, it has a little bit, but in real terms, when you factor in inflation, it hasn't really budged. At the same time, the second factor is the inflation. Now, inflation has been traditionally around 4 to 6% range, particularly for food. But in the last 2 years, I think we would all agree the compounding impact of the food inflation with petrol, with electricity has been far more than that. And I think it's a global phenomenon. I think we all accept that it's not just us, but the impact on South Africa has been very severe. And I think in your earlier segment, you talked about load shedding. The impact of that, we don't really yet know. I mean, we haven't really seen the full impact on the food chain, the supply chain, or what's going to happen in 6 months' time, given that we had load shedding for extended periods of time. And the third thing that has really hit us hard since November 2021 is the rapid increase in a short space of time of the interest rates. Now, I think we can all agree that up until between the middle of 2020 and the end of 2021, interest rates were low, and it was a great time, especially for our younger people, to get into the market and own an asset. But what seems to have happened is that, and this is a point we try to drum home all the time with DebtBusters consumers, we need to make sure we leave a little bit of extra room when we commit to such things as assets, particularly when we're talking about cars. And I think many of our consumers didn't or couldn't do that. And as a result, they now are finding themselves having to spend a lot more on food, having to spend a lot more in terms of paying back their vehicles, their homes. And I think that's why the consumer is feeling very squeezed.
Now, Benay, interesting that people are turning to loans, short-term loans, unsecured loans, because my concern around that is it obviously seems to suggest that consumers are hopeful that something would improve at some point so that they would be able to obviously service those loans. Is that thinking correct? Because, how then? Isn't this just complicating the situation even further?
I think we really feel for the consumers. I mean, having spoken to thousands of consumers, our feeling is that consumers don't necessarily want to do this, but they don't really feel like they have too many options in the short term. What happened, especially since the beginning of this year, is that traditionally after Christmas period, our business is somewhat busy. But what happened this year is that the increases when it comes to impact of, let's say, medical aid increases and so on has been so significant when you compound everything that consumers feel like they've had to take loans. And if you look through the data, you'll see that 96% of the people who applied for debt counseling services had a personal loan when they applied. Now, these personal loans range in terms of their size. Some of them are small, 5, 10, 15,000 rand, which we deem small. Some of them are really large, up to 250,000 rand. On top of that, we also have a category called payday loans or short-term, really short-term loans. And we're seeing about 20% of the people coming to us with those loans. I think those are the ones that generally worry us the most because those are the really expensive ones. Now, going back to your question, in our experience, each time you get a personal loan or a short-term loan, each successive one, generally the interest rate is going to be higher, especially if you haven't paid the previous one. And I think what we're finding ourselves now for many of our consumers is they're having to borrow to pay the previous loan. And unfortunately, as you said, this is not a sustainable solution. So I think we really excited in a way that many consumers are choosing to say, you know what, no more. Let me seek help in a different way. And rather than going for option of another loan, they're actually seeking the advice of a professional, qualified debt counselor to help them.
So, you touched on the interest rates as well, Benay. Now, in the face of the scenario that you've just sketched for us, which is very gloomy, it goes without saying that consumers can simply not afford any more price shocks. And considering the impending interest rate hike, we'll be under even more pressure, even more press to make ends meet. So how much of an effect do these interest rates hike have on the increasing consumer debt? Because, again, outside of our control, and I think there's always, some hope that those in charge would try and cushion us from this blow, but it's not happening.
Yeah, it's a great question. And I think we have to see it in context of cycles. Interest rates go up and they also go down. In 2020, they were at historical lows. And I think, that was a great time for borrowing. And generally, when we talk to consumers, our advice is based on thinking of the borrowing landscape in three big sort of areas. One, you borrow for your home. And two, you borrow to finance a car. And three, everything else, whether it's credit cards or personal loans or overdraft facilities. Now, with the first two groups, your bond or your vehicle, generally, in most cases in South Africa, the interest rate is linked to any changes that the Reserve Bank would make to the prime rate, to the repo rate, as they call it. So what that means is if the interest rates go down, which they did in 2020 significantly, for your bond and for your vehicle, if it's financed, generally you pay less than you did before. If the interest rates go up, you pay more. With unsecured loans, such as personal loans and credit cards, they're generally, the interest rate is fixed over the term of the agreement. So there isn't much of a fluctuation. So you don't feel it immediately. So what we are seeing now is, to your point, we looked at the average, many of the average consumers. So someone who has an outstanding bond of, call it 500,000 Rand that they still owe, and someone who's used about 150,000 Rands to finance their vehicle. Now, that consumer in 2020, they would be paying 8.4%, around 8.4% interest rate for their bond and around 11.4% for their vehicle. The same consumer today, the interest rates have gone up. For the bond, it will be around 11.4%. And for the vehicle, it would be close to 15%. Now, these sound like small number movements, but in reality, what it means for that consumer is that if they have both of these products, again, a bond that's outstanding for 500,000 Rand and a vehicle finance 150,000 Rand, which is quite typical, especially with our younger audience, they're needing to find somewhere between 3,000 to 4,000 Rand extra per month for the average consumer. Now, I don't know about many people who will immediately find extra 3,000 or 4,000 Rand. So I think some of what we are seeing today is the immediate shock of the interest rate increases that kind of, happened over the last year and a half. So, as you said, we're expecting another interest rate increase that's coming in the next week or so. And our advice to consumers would be, don't wait for it, but rather try to stretch your money as much as you can. By joining up the right programs, pooling resources with the right, other individuals. Loyalty programs are great. Try to stretch your money as much as you can. Don't wait for the interest rates to go up again.
So, Benay, great for those who can stretch whatever they have. Those who can't, what do they do at this point?
Yeah, it's a good question. So if you're unable to, then the first starting point is look at your bank statement and understand what you're actually paying for your interest rate. I think we throw away some numbers earlier, not to confuse our viewers, but to make the point. If you understand what your interest rate is and understand whether that's a big factor in terms of your inability to pay, if your interest rates are high, it's not the same for everyone. So I think it's important that our viewers understand what is their interest rate, if they have a credit card, if they have a bond, and so on. The second thing I would say is look at how much of your take-home pay you're spending on the various items. For example, if you're spending more than 30% of your take-home pay towards your debt repayments, and this is our golden rule at DebtBusters, I think you need to speak to someone who can help you reduce those debt repayments, and that's generally going to be a debt counselor. The 30% is a very important mark. If it's more than that, then you're definitely in a situation where you will not be sustainable in terms of your financial position. And why is this important? It's generally, consumers can have a good feel for how to reduce expenses that are non-debt related, generally speaking. But when it comes to debt repayments, often we have the tendency to either bury our heads in the sand and pretend it's not there, or to completely avoid it. And our urge to the consumers would be, if it's making up a big chunk of your take-home pay, don't bury your head in the sand, but rather seek professional help. And hopefully someone can help you in terms of restructuring your debt repayments, be it directly with banks and otherwise.
So, and this, of course, is what many people are grappling with at the moment, Benay. And as you said, rather seek professional help, but people also worry that that would then have an impact on their credit profile. So, what is the best sort of help to seek then in that instance?
Yeah, I think it's a good point. It's important to understand your credit profile. Often what we find is consumers who are really struggling to repay back their debt, they know it and they know that they need to do something, but often they don't, the majority of the cases. And what happens is in the short term, nothing happens to your credit score, but in the long term, they start missing payments. And I think that's the worst thing that the consumer can find themselves in. The moment they start choosing which creditor to pay and which creditor to not pay, that the danger signs are there and some action needs to be taken. So we don't want consumers to be in that situation, because over the long term, your credit score is going to deteriorate, especially if you have arrears and so on. With something like debt counseling, when you join, if it's an option for our consumers, initially, your credit score goes down slightly, but in the long term, it goes up significantly as you keep repaying back your debt. And I think it's an important point to make. We need to make sure that in the long term, we're paying back our debt and not make the short-term decisions. So my advice would be to consumers, get the full picture from a qualified individual, understand what the impact will be on your credit score if you pay, but also if you don't pay, and see what options are available to you in terms of repaying back your debt. But definitely do not avoid making your debt repayments.
Well, we have to leave it there, Benay, but, so interesting. And of course, these are the sobering times we find ourselves in. One is calling around, trying to reduce whatever you can, get rid of whatever you perhaps can do without at this point. But it's hard, tough times. Benay Sager, thanks so much for your time this morning. DebtBusters Executive Head Benay Sager speaking to us about South Africans and how heavily indebted we are and what we could possibly do in order to try and assist and help ourselves with this heavy debt burden.